Good afternoon and happy Thursday, everyone. It is Scott Wohlers with River Place Capital. It is Thursday, September the 1st, and just wanted to discuss what's happened in markets over this last week. As we've had a significant sell off over the last week in equity markets off of Fed Chair Powell's conference speech last Friday in Jackson Hole. We'll get into that and discuss that as well. And markets continue the downtrend this week, being down all 3 days or all 4 days so far this week as we speak. And the S&P 500 finished the week down 3.6% on the week last week. Most of that was done on damage was done on Friday after the Fed chair's speech. The mid cap index was not down as bad, down 2.7%. And the small caps as measured by the S&P 600 were down 3.10%. So as we were speaking last week, all eyes were going to be on what Fed Chair Powell had to say on last Friday at his speech at Jackson Hole. And what had allowed the market to rally over the last couple of months were a couple of factors. Number one, the first condition was we were just so oversold that the sellers were exhausted and the buyers came in and took over. And so from a technical perspective, we were just oversold, and then buyers came in and started buying up. The other was that the Federal Reserve, if we were able to get our inflationary numbers down and see some improvement, would not be as we would say, hawkish or as aggressive in raising interest rates over the next couple of months. And so when the inflation numbers came out for July and showed that they were flat month over month, the market believed that Fed Chair Jay Powell would maybe take a less hawkish stance at the Jackson Hole Symposium, and that he would maybe only raise 50 points at the end of this month when the Fed meets. Well, all of that really kind of got turned on its head on Friday when Fed Chair Powell went out and spoke and said that the Fed was going to be as aggressive as necessary to combat inflation. Well, and that some pain may happen with that. And so with that being said, the market realized that the Fed chair is being very hawkish in his tone, and that 50 basis points, well, that's off the table for the end of this month. And you really saw the market sell off, and you saw rates tick up pretty significantly. And the 2-year is at its highs for the year and highs that it's been in many years. And so all of that has followed through this week into continued selling pressure. And this week, when we've gotten good economic news, it's become bad news for the market, because that means that it's going to encourage the Fed chair to continue to be aggressive and hawkish. And that good news that we got this week was the JOLTS number on Tuesday. JOLTS is the measure of job openings in the country, and so there are 11.5 million job openings, and that is more job openings than were anticipated. And then today, the weekly jobless claims were at the lowest level they've been in a couple of months, which means employment still remains very strong. And just to put things into perspective, there's 6.5 million unemployed Americans and 11.5 million open jobs. So essentially, there's 2-to-1 job openings per unemployed American, which means the labor market's strong, which is why the market's pricing in a very aggressive Fed here, because Fed Chair Powell is going to say in his conference that labor remains very strong and it can withstand the aggressive rate hikes that they are setting forward. Now, all that said, in you've heard on CNBC, and when market conditions are like this, if you watch CNBC, they will patrol every person who is negative on the market out, and it's doom and gloom for the markets. But we track something different. We talk about it all the time from a technical perspective, and that's the money flows. And that's really just tracking where the money's going. Are there more buyers than sellers in the market and individual equities on a day-to-day basis? And the money flows continue to remain very, very strong. And they are very, very positive, which is diverging from what some of the other technical analysis is telling you. So we are dipping into what we believe are oversold conditions, and so there may be some light at the end of the tunnel for this. Now, we do have the big jobs number tomorrow, and if the jobs come in very strong, expect the market to continue to possibly move down off of that good news. Remember, right now we're in a weird environment where Good economic news is bad news for the equity markets because that's going to allow the Federal Reserve Bank to be more aggressive or more hawkish in their tone. So as always, if you have questions about what's going on in your individual portfolio or how to navigate these really challenging times, feel free to give us a call. We'd love to help you through that. You can reach us at 904-346-3460, or as always, check us out online at www.riverplacecapital.com. Have a wonderful rest of your week, everyone. Thank you so much.